All right, thank you so much for your patience. We're about to get started. We had some little technical difficulties. I'm just confirming the audio, please, and then we'll start to go through the slides. So please let me know you can't hear the audio. Okay, great. Thanks for confirming. You're a step ahead of me. So we're just going to have to go because I'm trying to confirm this audio. They just changed the layout. And here's the layout. Here it is. All right, perfect. Awesome. So thank you so much for joining. We may have to turn the camera off because it seems to make things a little bit frozen. So appreciate your patience with that. But we'll definitely deliver the content. We definitely will keep the camera on for the screen because that's the key camera to be on. So the deadline, or the topic I should say, is we're talking about the December 31st solo 401k setup deadline. So it's that time of year. It's the end of the year. It's usually a very busy time of year because individuals who are eligible to set up a solo 401k are trying to set it up by the end of the year, because as you'll learn when we go through these slides, that if you sign up by the end of the year, you're going to be able to lock in the ability to make 2023 contributions anytime up until your business tax return deadline, including any timely filed extension next year in 2024. And we've made it very easy. It's just 3 simple steps. So you can easily take care of this before the end of the year, circle back, get the accounts set up. We'll help you open up the accounts, make the contributions, all that good stuff. So let's dive into the content. And so first of all, as always, we just want to clarify that the presentation is being provided for educational purposes only. There's no intention to give investment advice or legal advice. And of course, we'd always encourage you to discuss with your investment advisors, your tax or legal advisors, etc. So thank you so much. We'd also just love for you to please like and subscribe. We want to highlight that we have tremendous resources. We host daily Zoom calls like this on our community. You can easily find that at mysolo401k.net/my community. It's always free to join. All are welcome. We go live every day at 1 p.m. Pacific, 4 p.m. Eastern. We're just hosting today's session on the YouTube channel. We also have forums where you can post questions 24/7. We have a video library with hundreds of videos and webinars. So it's a tremendous way to learn and to share the knowledge. You can see, for example, there's the community. You can see we've got forums. People are posting questions. It's a great way to see what other individuals are posting and to learn. We have these video libraries that I mentioned. We've got over 100 videos in there. So it's fantastic. I should say hundreds. I think we have a couple hundred now. So, and I see that the questions are being teed up. So we're going to turn to those here in a second. But let's first dive into the slides so we can lay the foundation. So again, the focus is, what's the deadline to set up a solo 401k for 2023? Well, it's December 31st. So as long as the plan is set up by the end of the year, that's going to preserve the right to make contributions for 2023 all the way up until your business tax return deadline, including any timely filed extension. So that means we got to know, okay, what does it mean to set up a plan, right? So it's really just 3 steps. Number 1, complete our quick 1-minute online application, right? So this is how we gather the information that's needed to draft a 401k plan specifically for your business, right? We whittled it down to just 10 simple questions. Just fill out the fields, hit submit to give us the information, make payment. That'll put your plan in the queue for us to draft the documents same day. So step 2, we draft the solo 401k plan documents the same day, right? And then step 3, you just need to sign the documents. So it's as easy as that, right? Step 1, submit the application. Step 2, draft the documents. Step 3, sign the documents, right? You don't even need to give them back to us until next year to create the plan. By you signing those documents, that's what creates the plan. And so again, we make it super easy, just a minute application. Documents are prepared same day. We send you an email where you can access the documents on our secure portal. You just download, sign, and you're done, right? You can go on and circle back. You can go on with the rest of your year-end activities or obligations and circle back next year. So what does that get you, right? What does that result in, right? So just by signing the documents by the end of the year, now you've created the 401k plan, right? And I think it's helpful. The way that I think about it is that a 401k plan is really a legal entity. So like any legal entity, it's the documents that create it. So by signing those documents, you've created the entity, in this case, a 401k, right? A 401k is a trust. So by signing the documents, you've created that 401k trust. You've met the deadline. Now you are entitled to make 2023 contributions to your solo 401k anytime up until the business tax return deadline, including any timely filed extension. So that's going to include all types of solo 401k contributions, right? A solo 401k has the highest contribution limits for any defined contribution plan available to self-employed individuals because you're able to make multiple types, right? You can make employee, you can make employer, right? In the words of the IRS, you're both the employee and the employer. And on top of that, with our plan, you're also able to make those contributions as pre-tax, as Roth, and or as voluntary after tax, which is how individuals make so-called Mega Backdoor Roth solo 401k contributions. So when someone talks about making Mega Backdoor Roth solo 401k contributions, they're really talking about making voluntary after-tax contributions. So there's no obligation to open the accounts, right? In 2023, all you need to do is sign the documents. There's no obligation to make the contributions or get the EIN number. All of these things can happen anytime next year up until your business tax return deadline, including any timely filed extension. And so for 2023, those contribution limits will go up to 66,000, assuming you've got the self-employment income to justify the contribution, et cetera, or even 73,500 if you're 50 or older. So there's some tremendous benefits by setting up the plan here by the end of the year. So let's zoom in a little closer on those steps, right? So again, step one takes just a minute. Complete the online application and make payment. Again, we're collecting the information that we need to draft that legal document, to draft those solo 401k trust establishment documents. And then again, step two, we draft those documents. So those documents are going to include the adoption agreement, the trust agreement. We also include a copy of our IRS favorable determination letter, which confirms that the plan is a qualified plan, right? You need to set up a qualified plan, for example, in order to be able to make those deductible contributions or those Roth contributions. And then step three, sign the documents. So we put those documents out on a secure portal. You receive an email same day where you can access the documents. You just simply download and sign the documents, which can be signed electronically, right? You could, of course, you can print it. You can sign it with a wedding signature. And that's it. You've met the deadline, right? The plan is now effective for 2023. So again, you just need to sign the document by the end of the year, right? And this will preserve the ability to make all types of contributions up until the tax return deadline, including any timely filed extension in 2024. So now once you've done that, you can take your time in 2024 to get an EIN number for the plan. So that's what we do as part of the onboarding process. And that meets the IRS expectation that a separate EIN is obtained for the 401k. And this would ultimately be used to open up the accounts for the solo 401k. So once you're ready to open up accounts and make contributions in 2024, you just circle back and we help you open up those accounts. Specifically, we're obtaining the EIN number. Specifically, we're drafting the documents that are needed to open up the accounts. Now, we've helped clients, and we do help clients open up accounts every single day. We've helped clients open up accounts at hundreds of different banks, many different brokerages, different credit unions, right? So some of the top brokerages are going to be Fidelity and Schwab. Let's say you want to do that. We would pre-fill the paperwork that the brokerage requires to open up the account. We would list the EIN number for the 401k on the application. Let's say it's Schwab, right? We put it back on our secure portal. You just download the Schwab application. It's all pre-filled out. You essentially just need to sign it, upload it, Then we review and compile it and then fax it to Schwab's back office. And then within a matter of days, Schwab will email you once they've received and processed that application and the accounts are open. And then you can start making contributions, right? Again, you'll have up until your business tax return deadline, including any timely filed extension, to make all types of contributions for 2023. And then we'll be there also to educate you on those contribution rules so you can understand exactly how much you can contribute for 2023. So you can do those final steps in 2024. You can send us back the signed documents. Of course, you can send us back before then, but if you want to wait, you can send it back to us in 2024, opening up the account, funding the account, making those contributions, and of course, there's contributions is not just the only reason that clients sign up with us, right? Other top reasons would be the ability to take a 401k loan, right? So once the account is funded, you could take a loan right away, and we draft the 401k loan documents. Also investing in alternative investments like real estate, right? So once the account is funded, then now you can start making those investments. And then we're here to, answer questions, right? We educate our clients every day in terms of the rules of making investments. We're helping prepare 401k loan documents every single day. So now you can start utilizing the plan above and beyond making the contributions. So just to keep reiterating these key points, because they're very frequently asked questions. Do I have to obtain an employer identification number for the 401k by the end of the year? The answer is no, right? What's needed is to create the plan by the end of the year, and that is done by signing the documents. The EIN for the solo 401k can be obtained next year when you're ready to open up the account for the solo 401k. Do I have to open up the solo 401k account at the bank or brokerage of choice by the end of the year? No, right? Again, what's needed to meet the deadline is create the plan. How you create the plan is sign the documents, which we create those documents same day. So we make it very easy for you to meet that deadline. And then once you're ready to make those contributions next year, just circle back. We have an online form that clients can use 24/7 to let us know where they want to have the account at. Then we can quickly prepare those documents and help you open up the account. Do I have to make my employee and employer contributions by the end of the year? No, you don't, right? Again, as long as the plan is set up by the end of the year, now the deadline to make all types of contributions, and this is an excerpt from IRS publication 560, which confirms that the deadline is now going to be that business tax return deadline, including any timely filed extension. Let's take a second to read it closely, right? So you can see IRS publication 560, which is the landmark guidance for self-employed retirement plans like solo 401ks. There's a chart on page 3 that says when to set up the plan, right? By the end of the tax year. So that's December 31st, 2023 for 2023 contributions. The last date for your contribution, elective deferral. So that's that's a synonym for an employee contribution, right? Is the due date of the employer's return. So you are the employer when you're self-employed, including extensions. Employer contributions, right? That's the other type of contribution that can be made. Again, it's the same due date of employer's return, including extensions. So this just further confirms that as long as the plan is set up by the end of the year, now you have the ability to make all types of contributions to the solo 401k up until that business tax return deadline, including any timely filed extension. So here's a good question that comes up a lot, right? Because as I mentioned at the outset, right, a lot of folks are setting up a plan by the end of the year so they can make contributions next year before their tax return deadline. And the question will become, okay, well, if I'm setting up a plan at the end of the year, how can I make contributions based on income that I earned at the beginning of the year, right? So when the plan documents are drafted, which is the industry best practice, they're drafted to be effective as of January 1 of the beginning of the year. So really, you're able to use self-employment income that you earned and reported for 2023, that you earned throughout the year and reported for 2023 to justify those contributions that you make anytime up until the business tax return deadline, next year. So that's why, even though you are signing the documents at the end of 2023, you're really able to use income that you earned throughout the year to justify those 2023 contributions. All right, so here we go. So another really common FAQ. My CPA tax advisor is informing me that employee contributions must be made by the end of the year. Are you sure that I can make this contribution in 2024? And this is a common point of confusion because the tax deadline for employee contributions, if we were referring to a full-time employer plan, like one that you might have at a day job, is the end of the year, right? So that is true. Employee contributions are due if this is a full-time employer plan. But the rules are different for solo 401ks. And we saw up above with IRS publication 560, confirmation that the rules are different for self-employed individuals, which from a policy perspective does make sense because your ability to contribute to the plan is a function of your self-employment income. And a lot of times you don't know how much you've made until after the end of the year, right? Your business might be seasonal where you earn a lot of your money at the end of the year. So you really don't know exactly how much you are going to report as earned income until after the end of the year. So if your ability to contribute is a function of your earned income, well, you really don't know how much you can contribute until after the end of the year. So you need more time to determine how much you can contribute and then how much you want to contribute. So that's why the answer is yes, that is true. But if we were talking about a full-time employer plan, but it's not true since we're talking about a solo 401k for a self-employed individual. All right, so let's take a look at the actual deadline just to kind of give us a chart, right? So as I mentioned, it's that business tax return deadline. So let's read that closely. So that really means it depends on how your business is taxed, right? So if your business is taxed as a sole proprietor, where you don't have a formal legal entity, you're reporting your earned income on your 1040. Well, that effectively means that your business tax return deadline is your 1040 deadline, right? So that's your typical April 15th or October 15th if you file a timely extension. Whereas if you have an S Corp, right, or maybe a partnership for your business, now the deadline is going to be March 15th or September 16th if you file a timely extension. And again, that's for all types of contributions. So even those employee contributions, they would need to be contributed by that business tax return deadline, including any timely filed extension. So hopefully that helps. All right. So again, please, continue to engage on the community, mysolo401k.net/my community. Please like and subscribe on the YouTube channel. Let's start to go through the great questions. Thank you so much for all the good questions here. Okay, so 3 questions regarding transferring, converting a property from 401k to a Roth 401k. All right, thank you so much for bringing the good questions. I would like to split up the transfer with half in 2023 and half in 2024 to avoid pushing me into higher tax brackets. If I get an appraisal on the property in 2023, can I use that same appraisal for determining the value of the property of the other half of the conversion in January 2024, since the appraisal would be less? And so, yes, ultimately, you're correct. If you're doing an in-kind transfer of a pre-tax 401k asset to a Roth 401k asset, of course, it's going to be taxable, and determination of the value of that asset would have to be made. It does seem reasonable that there would be no change to the value, but ultimately it would depend on the facts and circumstances. It's noteworthy that the title is not going to change. So that's going to be helpful because the entity is still held inside the solo 401k. Really, the fact that it's held in the pre-tax versus the Roth status is something that's just tracked at the plan level. And to the extent that there's any income and expenses during that intervening period where half of the asset is held in the Roth account versus the pre-tax account, it's going to be important that those income and expenses are allocated correctly between the pre-tax and the Roth sub-account. But hopefully that helps. Thank you for bringing the good question. Does converting either cash or assets currently in a traditional 401k to a Roth 401k affect contribution limits for the year? So the answer is no, right? I mean, if you are converting assets in your pre-tax account to your Roth solo 401k account, or cash from a pre-tax status to a Roth status, of course, that's going to be taxable. Of course, that's going to be reportable, but it doesn't impact one's ability to make contributions. It's not considered to be a contribution to the Roth account, for example. Now, of course, you would, to your next question, can you still contribute the max? Yes, it's not going to impact it, but of course you would need the income to justify that contribution, etc. As far as the taxable implication of the transfer, that's that amount of that, say, pre-tax cash or the pre-tax asset that's converted to a Roth status is going to need to be reported as income for the year of the conversion. So you're going to have to work with your tax advisor to report it as income, and effectively it would be subject to income tax. Hopefully that helps. Thank you for the good question. Let's see, thanks to a rollover, a solo 401k account has passed the $250,000 threshold. I know I have to file a Form 5500EZ for it, but does this situation now also obligate me to also file for the accounts I filed with my solo 401k? That's a great question. So I'm guessing that this is a separate solo 401k. So typically when we have a lot of individuals that start with a solo 401k somewhere else, and then they upgrade to our plan to take advantage of the service and features like the Mega Backdoor Roth, or the fact that we handle the Form 5500EZ preparation and filing under the electronic filing system, in which case it's really just continues to just be one plan, because that existing plan was restated. Here it sounds like there was two different plans, right? So it's going to depend on the facts and circumstances, but if those two businesses are really part of a control group, it's going to be best to aggregate and consider both balances in determining whether or not a 5500EZ needs to be filed for both plans, right? Subject to the fact that, it's going to depend on the facts and circumstances. That's going to be, hopefully that's at least helpful comments. Okay, let's go to the next question. Thank you for the good questions. Okay, first question. For one owner age below 50, LLC taxed as S Corp, and one employee. I'm expecting gross income for LLC to be around $130,000 for 2023. Expected salary is $70,000 and $53,000 is net salary. Which salary number to use for various calculations? So got it. So I'm understanding that here you have a single owner business, no employees, so they're eligible to set up a solo 401k. The business is taxed as an S Corp. So one's ability to contribute to the solo 401k is going to be based on the self-employment compensation. And so what that means depends on how the business is taxed. For a business taxed as an S Corp, self-employment compensation is the W-2 wages. Specifically, you would use box 1 of the W-2 plus any pre-tax elective deferrals not in box 1. So for example, if you made $20,000 in pre-tax employee contributions that reduce box 1 since they repeat pre-tax and instead were reported in box 12, and the remaining amount in box 1 was $50,000, then you would use $70,000, right? $50,000 in box 1 plus the $20,000 of pre-tax elective deferrals not reported in box 1, but instead reported over in box 12 for a total of $70,000. So now the individual would be able to contribute, for example, 25% of that amount as an employer contribution, right? Because the employer limit is 25% of W-2 wages. Hopefully that helps. All right, next question. Recent changes to FAFSA says that pre-tax contributions to employer-sponsored retirement plans won't count as income. Could you please clarify if this includes contributions from both employee or employer, or contribution only from one, and which one? Unfortunately, I don't have information on that because I would anticipate that it's going to depend on those FAFSA rules. And one question would be whether or not that would also include contributions to a one participant plan. They may not have contemplated that in the rules, but it would be something to at least look at. I'm sorry, I'm not familiar with those FAFSA rules, so I don't want to give misinformation, but I do appreciate the good question. That's a great question. So if intention is to invest in stocks and bonds only and decide to open brokerage accounts at Fidelity, understand that a total of 3 brokerage accounts should be opened using the retirement plan trust, EIN and name, the one for the pre-tax, for the employee and employer pre-tax contributions, the second for the Roth, and the third for the voluntary after-tax. That is correct, right? You definitely would need those 3 separate sub-accounts. And we help our clients as part of the onboarding process, where we ask them, where do you want to have the accounts? Okay, you want to have it at Fidelity. You want to do Mega Backdoor Roth. Okay, great. Then we grab the account applications. We pre-fill it with the client information. We put it on the secure portal so they can simply download, sign, fill out the rest of the fields that we may not have the access to the information. And then they upload it so we can review and compile it so that it can be submitted to Fidelity. Hopefully that makes sense. Thank you for the good question. Is opening a checking account also required, recommended for a retirement plan trust? So it's certainly allowable. It's certainly very popular for our clients. Like I think I mentioned at the outset, we help clients open accounts at the bank or brokerage of choice. We've helped clients open up accounts at hundreds of different banks, many credit unions as well. So we prepare basically a packet that contains the documents that the bank typically wants. Now, as far as whether it's recommended or required, no, it's not required, right? So if all you want is a brokerage account, that's certainly totally fine, right? The reason that folks typically would want a bank account is because of what they're looking to invest in, right? So if you're looking to invest in a mutual fund, a stock, et cetera, where you need access to a brokerage account to make that type of investment, right? You can't invest in Tesla stock from your credit union account. You need to have an account at a brokerage where you can buy it on the exchange. So if that's all you're looking to invest in, you don't need a bank account. But a lot of our clients also, or maybe in addition to those brokerage type investments, will want to invest in alternative investments, right? It could be real estate, it could be notes, it could be private placements, right? And for those types of investors, a lot of them find that it's helpful to have a bank account, because now they get access to things like certified bank checks, a debit card, the ability to ACH money in and out of the account easily, which they find helpful when they're making and managing those types of investments. Now, it's also noteworthy that a number of the brokerages do provide a free checkbook with respect to the brokerage account, right? Like Fidelity does, Schwab does. So it's kind of a hybrid, right? You've got at least that checkbook access. It's not a certified checkbook access. It's not debit card, but it is helpful maybe for some light alternative investing. Thank you so much for the good question. Can you speak to how you help a financial advisor who is looking to set up a solo 401k for their client? Absolutely. We have many clients and their advisors who we work with, we're fortunate to work with. The one thing that's noteworthy, or that I think about when we're talking about advisors, is of course compliance, service, right? So from a compliance perspective, it's always it's not always clear, for example, that the person's eligible or what those contribution rules might be. And so we are there to help support and answer and verify, of course, that the person's eligible. From a support perspective or a service perspective, as I've mentioned, I mean, we're neutral as far as where the accounts are at. But for the advisor and the client who wants to work with that advisor might custody at a specific place, right? So it's going to be helpful to know that the client is working with the advisor and where they're custodying. So let's say they're at Schwab Institutional or Fidelity Institutional. We're happy to prepare the paperwork that those, because they have a different set of paperwork if it's an institutional account, so that the advisor's code can be listed on the top of the form. And we're happy to pre-fill that institutional paperwork, or sometimes the advisor will just go ahead and do it. Ultimately, what we care about is, that things are done in a compliant fashion, right? So that the accounts are opened up under the EIN of the plan, that you got separate accounts if there's different, say, participants or different types of funds like pre-tax and Roth, right? So what a lot of clients and their advisors finds works well is that when the person is signing up, or maybe the advisor is filling out the online application on behalf of the client. Remember, I mentioned it's just 10 simple questions where we gather the information that's needed to prepare the solo 401k documents. Well, what's nice about our online form is that it's free form fields, right? So like the last question is going to be, what's the name that you want to assign to the plan? And it's best to use 2 words in the word trust for a total of 3 words. So you could really use any 2 words, right? So in that same field, what folks will do is they'll just list the name and the email of their advisor. So now we can connect the dots and see that that person is working with that advisor. Now we can copy the advisor on communication. So the name of the plan might be Main Street Trust, and it says, please copy, George Blower, and then my email address, and we'll copy the advisor, or obviously your name and email. So we would copy you. You would have visibility as we're guiding the client through that onboarding process. Hopefully that makes sense. Thank you for the good question. If you have net self-employment income of only $15,000, can you still contribute the $22,500 to a Roth 401k, or do you need to have the net self-employment income of at least $22,500 to contribute that amount? Yes, you certainly need the income to justify the contribution, right? I mean, the way that I think about it is that a 401k is for employees to contribute to a retirement plan, and a solo 401k is for a self-employed person. But you still have that notion of a worker, right? An employee. And so you can't save more than you earn. So if you want to save or contribute, in other words, $22,500, well, you have to have that earned income to justify that contribution. So you can't contribute more than either the lesser of your income or the limit that applies. Hopefully that makes sense. Is your annual fee for a 401k charged on the anniversary of opening the account every year, or is it charged on a certain date each year? So it's charged on the anniversary date. Like if someone were to sign up on December 1st, the annual fee is going to be due every December 1st and cover the following 12 months, right? So the initial cost is the $650, which includes the $525 establishment fee plus the first $125 annual fee. Then 12 months later, that first annual fee of $125 is due, which covers the second year. Can we get a copy of the slides? Absolutely. And we'll include a link they should already be actually out on our website, but we'll make sure that a link to the page on our website where you can access the slides is in the YouTube description after the session ends. Thank you so much for your good question. Is the 401k attached to the specific business? What if you have more than one business? So yes, I mean, if 401k is for an employer, right? A solo 401k is for a self-employed business. Now, you don't technically have to have a formal legal entity to set up a solo 401k. Ultimately, you just need to report earned self-employment income with no full-time W-2 employees working for any business owned by you or a spouse, if any. So we would list your self-employed business on the solo 401k establishment document. So we need to know, whether you're a sole proprietor or the name of your LLC, if you have an LLC, whatever it is, when we draft the documents for your business. Now, there are a number of folks that have multiple businesses, right? They might be serial entrepreneurs, and they don't necessarily need to list every single entity on the documents. They're actually able to aggregate from all sources of self-employment income to justify those contributions. And so typically what folks do is they just use the entity where their self-employment activity predominates as the entity that's listed on the solo 401k application and then listed on the solo 401k establishment documents. But you wouldn't set up multiple 401ks for multiple businesses if it's just ultimately one person that owns each of those different businesses. It would just be one plan, and then you aggregate from all sources. Hopefully that makes sense. Thank you so much for your patience as we're going through the questions, and thanks for all the great questions. Any recommendations on which custodian tends to be best for ease of administration or use? So really, it's a lot of it's personal preference, but we definitely can share feedback that Fidelity and Schwab are going to be your top brokerage options. In terms of banks, a lot of folks find that local banks, credit unions, I mean, a lot of our clients still want the ability to go into a branch, right? And having that personal touch, they enjoy. But as far as the brokerages, like I said, Fidelity and Schwab, they're very similar in terms of the fact that Fidelity and Schwab don't charge anything to open the account. There's no maintenance fee. They now even have free online trading. It comes with a free checkbook. And so it might just be down to, okay, which brokerage am I familiar with? Maybe I already have accounts there. I'm familiar with the layout of the website. There could be specific funds that individuals want to invest in. Maybe at Schwab that you can invest in that fund through a Fidelity account. So you would need a Schwab account to invest in that particular fund. So those are some of the top considerations. So I see there was a call, so we'd have to follow up with you on that. Thanks for joining and letting us know. Yes, and I saw you asked a question. That's great. Thank you so much for bringing the good question. So that's a great question. So we have our online application where clients give us the information. It just takes like a minute. Let's take a quick look at it. That's a great question. It's pretty self-explanatory as far as what needs to be entered. Let's see if we can just blow it up a little bit. Step 1, collect and provide information. So you have your name, your email, your phone, the name of your business, right? So that could be you if you're a sole proprietor, or the name of your LLC, the type of business, right? It might be an LLC, taxes and S corp, last day of your taxable year, right? 12/31. Do you have any full-time employees other than yourself or spouse or business partner? Of course, you can't if you want to have a solo 401k. So the answer is going to be no, and in order for you to be eligible. Will your spouse or business partner also contribute? So if you might have, we have a lot of situations where you got two, say, married individuals that are both working in the same business. In that case, both of them could participate in the solo 401k. It would just be one plan, one fee in that situation. They would both be listed as trustees. So the other, the one that's not listed up above is listed here. Even if that person, though, is not going to participate, you might want to give them signing authority, in which case you'd want to put their name here and list them as co-trustee only. Are you currently participating in a self-employed 401k? So there's a lot of individuals that already have a 401k and now they want to upgrade their plan to our plan to take advantage of the service and features of our plan. So they might have a basic plan at a discount brokerage like Fidelity. They could say, okay, solo 401k at Fidelity. You list the original effective date of the plan, because we need that to draft the documents as a restatement. Typically, that's going to be January 1 of the year that the plan was set up, and you can find that on the adoption agreement. Will you be transferring, money from an existing plan like an IRA or a former employer plan? You don't have to tell us about it now. Even if you want to do it later, we're happy to help you, prepare the transfer paperwork. But we'd like to just get a sense of it if that's going to be an immediate goal of yours. Your address, so just list a street address. It can be your home address, it can be your business address. It needs to be a street address. And then to the good question, right, the name of the plan. This is where, remember, a 401k is a legal entity. It's a trust. So the best practice is to name it by using 2 words in the word trust. It could be any 2 words, right? It could be a derivative of the name of your business, or it could be something totally unrelated, right? It could be, the street that you grew up on and then the word trust, right? Roosevelt Avenue Trust. So this is also the same field, back to the question about the advisor, where you could list, okay, Roosevelt Avenue Trust, and then also type in there, please copy your name and email address as the advisor. Hopefully that makes sense. Thank you for bringing the good question. What are the advantages or disadvantages of a 401k versus Roth 401k for low and high earners? So that's a great question. And the ability to make Roth contributions, mega backdoor Roth contributions, that's one of the top reasons that clients are setting up accounts with us. On the flip side, right, some folks, they want to make pre-tax contributions to reduce their taxable income now. So really that's a choice that is going to oftentimes be determined with someone's tax advisor, where they're looking at their current income, they're trying to forecast their income in the future, right? Because if you make a Roth contribution, you don't get the tax deduction, income tax deduction benefit now, but instead you have the potential for tax-free growth, right? So when you take a distribution from a Roth account, as long as it's a qualified Roth distribution, all the gains are going to be tax-free, right? So in order to be a qualified Roth distribution, you have to have had the account for 5 years and be at least 59 and a half years of age. As opposed to the advantage of making a pre-tax contribution is that you're reducing your taxable income now, right? So, but the flip side of the pre-tax contribution is that when you ultimately take the funds out of your 401k, you've got to include that amount in your income during the year of the distribution. So hopefully that gives you a framework to help analyze that. And that's a great question. Oh, right. Okay. It's done from a document perspective is a subscription agreement, right? Where the individuals are reviewing the investment details. They're signing the documents if they choose to invest under the name and the EIN number of the plan, right? And so there will be a lot of times disclosures in that subscription agreement that the solo 401k owner needs to go through and complete in order to make that investment. And so sometimes the language of that disclosure will ask the investor to specify whether the entity, in this case, the solo 401k, is a quote benefit plan investor, right? So if you look at ERISA, right, while a solo 401k is excluded from the definition of an employee benefit plan, it is considered to be an employee benefit plan investor because it is subject to the prohibited transaction rules. And there's a wealth of information on our website and on our community regarding these types of private investments or private placement investments. So please take a look at that, as that might be helpful. But thank you for the good question. It's going to depend on the facts and circumstances. So it's tough to just analyze it in this type of context, but it's possible. Feel free to book a call with us. So if you want to review it more closely. Well, we shoot to turn those around, ideally by the next business day. Although we really commit to do it within a couple of business days. But I mean, right now we're definitely turning those around quickly. And, because just to get back to folks, a lot of times individuals are trying to make an investment, et cetera. Thank you for all the great participation. If someone is in a jurisdiction, right, where they are subject to an extended deadline, and they still may have a deadline to file their 2022 tax return, in which case, yes, it can still be done. I believe in Florida, for example, certain counties, it's been pushed out to even February of next year. You would want to flag that to us when it's submitted, though, so we can understand the context. Please, though. Thank you for the good question. My retirement plan was transferred to Schwab when they bought TD Ameritrade. Would I need to roll that over into the solo 401k? Well, it depends, right? I mean, if it was an IRA or SEP IRA, then there would be no obligation to transfer it to the solo 401k. If it's a restatement, though, of, say, a Schwab solo 401k that got transferred, a TD solo 401k that got transferred to Schwab, and now the goal is to restate that basic plan to our plan, then yes, as part of the restatement, new accounts will be set up for the restated plan, and then the cash and assets will be transferred from the pre-existing account for the basic plan. For LLC taxed as S Corp and one owner and only one employee, which I presume is not a non-owner or a non-spouse employee. It's, in other words, it's the owner or their spouse. I would like to start the solo 401k this year. However, my spouse may join as an employee and or owner and employee in 2024 or 2025. Do we need to change the plan documents if she joins after we set up the plan this year only with me? So that's a great question. So what a lot of folks do, and I think we referred to this when we looked at the application, is that even if the spouse is not going to participate now, the spouse can be listed as a co-trustee now. So now that'll make it super easy to onboard the spouse when the spouse is working in the business and ready to start making contributions, because they'll already be listed as a trustee. So that's what folks typically do. And then there's no need to update the documents, etc. Everything will be ready. It'll just be a matter of opening up the account or accounts for the spouse. Hopefully that helps. So you can definitely use your own DocuSign, right? I mean, it's totally acceptable to meet the deadline with an electronic signature. You could use your own DocuSign. Absolutely. If you go to our calendar, which is mysolo401k.net/book, you can easily find our calendar. So that's going to be a good question. This sounds like somewhat of a complicated situation. So this might be another one to book a call for. Thank you so much. I want to make a max contribution to my Roth 401k for 2023. Am I correct in assuming that I could just make that contribution to my traditional 401k in December of 2023 and then convert it to my Roth 401k in January 2024 in order to push off having to pay taxes until April of 2025? Yes, absolutely. I mean, assuming that you are eligible to set up a solo 401k, now, you actually could, what's interesting is that you could make the contribution for 2023 by the business tax return deadline in 2024, and that would count as a 2023 contribution. If you made it as a pre-tax contribution, it would reduce your taxable income for 2023. And then shortly thereafter, you could convert it to a Roth 401k in 2024. And then that means that income would now be taxable in 2024. And then to your point, you'd have to pay taxes on it by April of 2025. To clarify the previous question, for one owner below 50, I'm expecting, and this is an S Corp. Right. So your gross income for the LLC is not relevant. What's relevant is the W-2 wages. Specifically, what's relevant is box 1 of the W-2 plus any pre-tax elective deferrals not in box 1, instead reported over in box 12 of the W-2. So a pre-tax elective deferral would be an employee contribution, right? That could be, for example, $22,500, assuming that no contributions were made to another plan like a day job plan. So if that employee contribution was made as a pre-tax contribution, that's going to reduce box 1, right? Because it's pre-tax. It's reducing the taxable income. It's instead reported over in box 12. And then what remains in box 1, together with that pre-tax elective deferral reported over in box 12, becomes the W-2 wage figure that's used to determine how much you can contribute, how much you can contribute as an employer, how much you can contribute as an after-tax, etc. So I'm not sure what you mean by gross or net exactly. Again, it's as simple as box 1 of the W-2 plus any pre-tax elected deferrals not in box 1, but over in box 12. I would check with your payroll provider. They might be able to help forecast what's going to be in box one. My CPA reports my business income on Form 1065 and net income was reported on Schedule 1 of my 1040. I watched some of your videos and it refers to Schedule C31, line 31 to calculate employer. Can I still open the solo for? So if you're filing a Form 1065, that's telling me that you're filing as a partnership, in which case you would use line 14 of the K1, less 1/2 of the self-employment tax to determine the self-employment compensation. And assuming that there are no employees, at least no full-time non-owner, non-spouse employees working for any business owned by you or a spouse, if any, then yes, you can open up a solo 401k. And then yes, you would be able to make those employer contributions based on that self-employment compensation figure where you're taking line 14 of the K1 less 1/2 of the self-employment tax. Yes, that's a great comment. So, per your earlier statement, am I correct that the self-directed solo 401k is excluded as an employee benefit plan, but it is a defined contribution plan? So, yes, it is excluded from the definition of an employee benefit plan, but it's considered to be a benefit plan investor per the prior question. It is a defined contribution plan. And we're talking about under those ERISA definitions, just to be clear. I still have 403B funds held by my previous employer that I have not rolled over or done anything with. I was told that I could roll these funds into the solo 401k. Yes, if you have money in a former employer plan, you can certainly roll it over to the solo 401k. We would prepare the transfer paperwork and we guide our clients through the process. The funds would transfer by check, mailed to the solo 401k participant, and then be deposited into the solo 401k account, right? Like into the pre-tax solo 401k account if it's pre-tax money. Looks like that takes us to the end of the questions. Thank you so much for the awesome participation. Please continue to participate. Please, whether on our community or like or subscribe on the YouTube. You really participated. We're planning some more of these deep dive sessions. So please, like I said, subscribe so you can get notifications. If you can come back and watch the recording later, it's going to be on YouTube. And yeah, we appreciate it. Thank you so much. Looks like that takes us to the end. All right, take care, everyone.